I mean, absolutely. You touched on the Netherlands. That is truly the case. I mean, Sweden, again, hedging currency. I mean, Stockholm is an exciting market, but with its challenges. And I think, you know, people, there's so much money on the sidelines in Spain at the moment, and it's happening again. I mean, it's recovering. They've been very disciplined. You are smiling, Linus. Would you agree or disagree? I hope you disagree. It's more exciting for the audience. So yes, there are a few others if you move out, but I would actually not call them core. Call them core plus. So there's more risk and hopefully also more return. But it's happening now. People are moving out.
Okay, good. Yeah, Paul. I think, as one of the panelists said earlier on, it's difficult to look at the countries as a homogenous block. So there may be more similarities between Amsterdam and London than there are between London and Scunthorpe. In terms of investment profile. So the ability to look at European gateway cities as a strategy rather than look at it as being Netherlands plus UK may be one way of looking at it. Or if you're investing in logistics, Blackstone recently bought Project Curve off of SEB, logistics in 8 different countries. That was a play looking at logistics in Europe rather than a citywide or a countrywide basis.
I've forgotten Ireland. I will be shocked by my colleagues if I don't do that. We've just acquired a building in the Southern Docklands in Dublin for 230 million euros, quite substantial. And there is beautiful stock around there, and Nama are opening up to to sell. So it's there's a few options in Europe. You've got to pick markets and assets properly.
Sure, yeah.
I think that was a little, as you said, that's a bit of a range in terms of defining them as core or non-core. I think I was in Stockholm on Monday and Tuesday this week, and I was talking to a gentleman there, and he was saying that the pricing of assets now are at an all-time high, and the premium to NAV on the listed real estate market is at an all-time high. He gave us an example, a company with NAV of 28, and the stock price was trading in the range of 58 to 72. And he said that is reflective of the slight hubris that is taking hold of the Nordic. But I would also say the Nordic is very different market. Sweden is by far the most, has the biggest churn and is the most transparent and efficient of the market. And I would argue if you're looking for, to answer your question, if you're looking for a place to invest, I'd much rather invest in ignoring the currency. I'd rather invest in Germany than in the Nordics right now, because Germany offers more stability, I think.
We should mention Poland as well. I think this is certainly in CEE, in Central European Europe, it's Central and Eastern Europe. It's certainly a market where we are looking very carefully into, where we are significantly invested, and where I think the geopolitical question in the east of Europe is going to be interesting as well in these countries. So a place to watch, but certainly a sound economy with great fundamentals.